Good morning and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Mathew. Now, we've seen quite a bit of selling this week, and I think the last couple of days, the best way to describe it is in superlative. So the longest streak of losses since. And we have lost now for 6 days in a row, and that's, as I was saying, the longest streak of losses since last year, since February of since February of this year. So that's about 7 months. Now, you also saw quite a bit of foreign institutional selling in yesterday's session, and that was, in fact, the most selling in 2023. So all of these kind of lay the foundation for what you will see at the end of the week as well. And let me take you through a couple of important data points. We had a high of 20,222 on the 15th of September. We're now down about 1,400 points. The Nifty Bank is in fact down as much as 4,000 points from its recent high of 46,310. For the week, in fact, the Nifty Bank is down about 3.3%. We've seen a market cap erosion in just the last 6 sessions of as much as 18 lakh crore rupees. To a certain extent, this is mirroring what you're seeing across the globe because risk assets have been on the back foot. Part of that has to do with geopolitics, but quite a bit also has to do with the fact that bond yields have been very volatile. However, in yesterday's session in the US, you saw the US GDP number that came out. That was 4.9%. That was faster than some people had anticipated and still showing quite a bit of resilience in the face of higher interest rates. That could lead to a conversation next week for the Fed, not to raise rates immediately, but indicate that they might raise rates. And we'll get you a perspective on that in just a bit. For now, though, let's focus on the levels that you need to watch out for in trade today based on the F&O data. Yesterday, remember, was also the monthly expiry, and we're heading into a new series today. Agam is joining in to talk about the key levels at the start of this new series. Yeah. It's changed quite dramatically.
It certainly has, Alex. In fact, no one was expecting the Nifty to break 19,000. That was a big psychological mark, besides the fact that there was a lot of open interest accumulation around there. So it certainly was considered a significant support for the markets. But we not only did we break below that, we closed well below that mark. And in fact, at the moment, we are looking at the Nifty potentially hovering between 18,500 and 19,000. So as I mentioned earlier, well, yesterday's support now becomes a resistance in today's day of trade. Well, based on that, of course, max OI now is in the 19,000 call, and on the lower end, we're watching out for 18,800. That could be perhaps an intraday support in today's day of trade, considering the accumulation of open interest in those puts going in. As far as the Bank Nifty goes, once again, a lot of activity has now shifted substantially below the 43,000 mark. And this is, once again, something that we weren't expecting. But at the moment, puts accumulation coming in at around 40,000. So we're looking at about a 3,000 point odd range moving into this coming week's expiry. And a lot of activity, as one might expect, has also shifted around the 42,500 mark. These are the levels that we're playing with, Alex, but I reckon that a lot will depend on the data that will come through over the course of the next week, and that will perhaps determine whether or not we are going to see further correction or some sort of consolidation. A substantial up move from here, at least for the coming week, there's a low probability of something like that happening.
Interesting. All right. Thanks so much, Agam, for pointing that out. And as Agam said, and for me, the takeaway is that the action shifts below 19,000. And that's what you need to bear in mind in trade today as well. But let's zoom out really and take a more global perspective. We're joined, in fact, by Santosh Rao, Head of Research and Partner at Manhattan Venture Partners. Thank you so much, Santosh, for taking the time, and good evening to you. It's before the trade starts today for us here in India, though. Give us some perspective on how you read the US GDP numbers, because I think that is a big talking point overnight. 4.9% and strong consumption growth as well. Does that give more fuel to the conversation around another rate hike, and when do you anticipate that?
Yeah, thank you. I think to some extent it was expected. to a large extent, actually. We knew it was, I think the whisper number was anywhere from 4.7, 4.5 to 5, actually. So it was, and we had even estimates at 3%. So it was like a wide range, but it was generally expected to be good, solid. The only issue is I think we've reached a point now where good news is bad news. We don't want such robust numbers. But this was expected. The whole issue now, the focus shifts to the future. I don't think we can repeat this. There was a lot of inventory accumulation. The consumer was strong and all that. But going forward, we have the student loan repayments coming up, a lot of the credit tightening going on. There's a general sentiment is slowing down as well in the consumer sentiment, even though the consumer is still strong. But I think his resiliency, his or her resiliency, his staying power, I think, is going to wobble a little bit going forward because there is some uncertainty. But as long as we have a good job market, I think we can sustain it, and inflation is coming down. So I think that should help overall. But net, the sentiment is down. And like they say, the path of least resistance is down. The bearish sentiment has set in. There definitely recession clouds hovering down the road. The timeline gets pushed out more and more. So now I think it's more like middle of next year. And I'm in the camp, and have been all along, that we will have a recession. It'll be a mild one, a quick one, and we'll go away given the resiliency of the US market. So that's where we are. That's the backdrop of how I see today's number. So it's good, but tough to sustain it.
It's interesting because there are corollaries that can be drawn, right? Where you're talking about an individual that's taken a flu shot. They're going to get sick eventually. The question is whether or not it's going to be a bad one. And everyone's thinking that maybe they can get away with just a head cold or something like that. But having said that, we've seen quite a bit of a correction, if we can call it that, in the equity markets in the US. The S&P 500 now, I think, down about 10% from the peak. And a lot of action shifting, Santosh, correct me if I'm wrong, to the Treasury, where we've seen quite a bit of action and quite a bit of volatility in the yields. What is your opinion about what happens to capital flows globally? I'm asking from the perspective of EMs because you have quite a bit of money that flowed out of the Indian market in the cash segment yesterday.
Absolutely. I think that's a big point right now. The 5%, the 10-year 5% rate, that if that gets breached, I mean, I know we touched on it and came down. Anything above that, it's definitely going to be it's not going to be good for the stock market for sure. Then you can get risk-free for 5% in a return for a bond. I think why would you go for the stock market? That's the general thinking, very simplistic thinking. But overall, the sentiment does change to the bond market, to safety, to safe haven. And that's what you're going to see, more and more people pulling out of the stock market. And the stock market was rich. Remember that. In the US especially, majority of the gains were restricted to about 7 to 8 big tech numbers, the Magnificent Seven, like they said. So those techs really were the ones who drove the indexes up and kept the economy up. But overall, the equal weighted index was not that high. So I think that's what you're saying. I think that's pulling back. Everything's pulling back. You're seeing the latest tech earnings, all good numbers, but it's not good enough. You want spectacular numbers because the stocks have run up quite a bit. And any sign of slowdown, any whisper of them telling that things are going to slow down, they look weak, that's it. People are selling. They're selling first and thinking later. That's the general mentality at this point. So you're going to see some pullback. It was expected. It's happening right away. There was a Fed put so far, so to speak. The Fed always came in and did something and kept the economy, kept the floor on the market. But now they're out of the picture. So now I think you're going to see some downturn, some slowdown in the stock market. And the bond market is going to really drive the economy, the market sentiment for a while. So let's see where that settles. Definitely a safe haven trade. And let's see where that's the whole thing. I mean, if the market is convinced, and I think it's pretty much convinced that, yes, the market is strong, but I think the odds of another rate hike are very low. The last time I checked, it was like 27%. I think the probability is that they might do one more, which is very low. So I think the general consensus is that there won't be any rate hikes this year, probably. And they have said it already. They'll probably have two cuts next year instead of 4 cuts that were expected, but there's no hike. Now the question is waiting for the cuts down the road. So,
Santosh, a couple of questions here. And I was reading a report that it talked about the fact that all of this is coming at a time when the US Fed is also trying to curtail its balance sheet and shrink it. And therefore, there is no bond buying to support the bond market there. So there is quite a bit of chop and churn in the yields as a result. What factor does that play in the rest of the year on yields? And the other aspect is, if you're looking out from the US at markets like India, markets like China, what according to you will look attractive in this scenario, or do you think that it's going to be risk off for a while?
Yes, it's going to be risk off. And I did not answer your earlier question. I think higher rates will also spike up the dollar. And that's not good for the US market, for the Indian markets and the emerging markets, because all the dollar-denominated debt and all the dollar-denominated purchases are going to be expensive. So all commodities will be expensive, oil will be expensive. So it has a ripple effect down the road when dollar is strong. And that's what's happening. Money is coming out of other countries into US because the rates are going up. The dollar is strong, so you don't want too strong a dollar as well. So I think let's see where that goes. That definitely has a weakening effect all over. In the US, yes, rates are going to be. It's definitely going to stay up there, and people want to ride out this whole turbulence, like the air pocket that we've hit. We don't know how long it's going to last. But definitely there is a caution in the air, and that's the operative word. So no one wants to buy. There are no buyers in the market. Everyone wants to just get out and stay on the sidelines and just wait for the dust to settle. That appears to be that's the scenario right now, and you will see a lot of that. I think that's the main thing.
Fantastic. All right, Santosh, thanks so much for that perspective, and look forward to talking to you soon.
Sure. Thank you. Thanks for having me.
All right, let's shift focus now to individual stocks that you need to watch out for and trade. ACC is a stock that will be in focus on the back of results, and Rishi is joining in to give you some perspective on how they stacked up against the outlook or the expectations. Over to you.
So,
morning.
So the results were more or less in line, but in fact, the profits actually beat estimates. That was tagged based on Bloomberg estimates. So net profit stood at 388 crores compared to a Bloomberg estimate of 334 crores. Now, revenue grew by over 11%, and this is on account of a volume growth of 17% to 8.1 million tons. And this was also partially offset by a drop in net realizations. But then again, EBITDA was up by almost 34 times, and this was on account of lower power and fuel costs. So power and fuel costs fell by about 32% to 886 crores. And also one other thing to note is that the surge in net profits as well as operating profits was also on account of a weaker base that the company had in the previous year's second quarter. Apart from that, there are a couple of brokerages that came out with notes with regards to its results. There's MK, which maintained its buy rating, and it raised the target price by about 3% to 2,365. This implies a 23.62% upside with regards to yesterday's closing. It attributes the lower EBITDA to lower than expected realizations, and the volume growth was driven by higher transactions, master sales agreements with its parent, with its Ambuja. Then it has also raised the EBITDA estimates by 5% for the current fiscal, which means we may possibly see higher EBITDA in the second half of the fiscal. Then there's Motilal Oswal, which has maintained a neutral rating on the stock with a target price of 2,150. This implies a 12.4% upside, and the PAT growth was again driven by a surge in volumes as well as a surge in other income. Apart from that, the brokerage is looking for more clarity with regards to future plans of the company, but regardless, it is positive with regards to the capex plans that it is executing. Apart from that, it also has a really strong presence in the central part of India. Apart from that, there's Jefferies, which has maintained its buy rating and the target price, and there's Citi, which has raised the target price by about 100 rupees. So the stock may continue to see some of the upside that it saw after the results yesterday.
All right, thanks so much, Rishi, for bringing us those updates. Let's focus in on the other earnings, and we're now winding down on the earnings season. Another 20 days or so left. for the current season to get over. We've got Varsha joining in with her whole list of stocks that she's watching for in trade. Morning, Varsha. What are you picking up?
Good morning. So, whole list of companies that has posted quarter 2 FY24 results. So, let's see. Starting with AGI Greenpack, revenue was up 20% at 615 crore, while EBITDA was up 58%. Now, the performance during the quarter was driven by higher sales volume and improvement in realization. Company is also in process of acquisition of Hindustan National Glass, which will increase company's capacity by over 3x. Then we have Retail Corporation, where the revenue was up 28% at 599 crore, while EBIT was up 2.08x at 77 crore versus 37 crore last year. And you see the PAT was up 77% at 68 crore versus 38 crore last year. Then we have Dixon Technologies, where revenue was up almost 28%, EBITDA was up 37%. Now the interesting thing is company's revenue from consumer electronics fell 4% to 1,440 crore, while its lighting products declined 38%, and the revenue from home appliances was flat. However, its revenue from mobile and EMS division jumped 77% to 2,819 crore. Then we have Venus Pipes and Tubes, where revenue was up 51%. Company witnessed highest ever quarterly revenue, with EBITDA margin surpassing 18% versus 12% last year. This was led by backward integration by the company. Also, if you see, PAT was up 2x at 20 crore. Now, revenue from stainless steel seamless doubled, while welded pipes witnessed a growth of almost 1%. Now, Venus has experienced remarkable export growth, which made up almost 15% of total revenues for the current quarter, standing at 28 crore versus 1.6 crore last year. Also, company's capacity increased by almost 3x from 12,000 metric tons per annum to 38,000 metric tons per annum for seamless and welded pipes. Now, historically, H2 has always been a stronger half as compared to H1. So maybe the next quarter will also be good for the company. Lastly, we have Sadhana Nitrochem. Now, the revenue was up 15%, but if you see, the PAT was at rupees 3 crore versus loss of 0.37 crore last year. The interesting thing about this company is that the company's facility has become second in the world to manufacture PAP, which is the raw material for paracetamol. So now the company will be producing this PAP through nitrobenzene process, which leads to a purer form of raw material. So now the company has received approval from Maharashtra Pollution Control Board for consent for the production for this PAP. Now this is big news for this company because it's second in the world to make this PAP through nitrobenzene route.
Repeat the name of the company again.
Sadhana Nitrochem.
Okay, all right. So clearly lots of stocks that we have to watch out for. Varsha, thank you so much for bringing us those updates. And interestingly, right, a lot of these names might see action today, and you see quite a bit of action at the broader end of the spectrum yesterday, where we've come off quite substantially from the low point of the day, at least at the benchmark level. Now, let's continue to look at individual stocks that are in focus on the back of results. We've got Mihika joining in with her list today. Morning.
Morning. So first we have Vodafone India. Revenue and EBITDA grew marginally at 0.5 and 3% year on year, while their margins improved by 95 basis points, and the net loss of the company widened to 8,737 crores versus the loss of 7,840 crores last year. The average revenue per person did rise 2.2% at 142 rupees versus 139 rupees. Then we have Colgate Palmolive India. Revenues were up 6% but missed analyst estimates, and whereas EBITDA margin and profits beat the estimates. EBITDA was up 18%, margin improved by 337 basis points, and PAT was up 22%. The company also announced its first interim dividend of rupees 22 per equity share for FY24. The record date set by the company is November 6th, and the payment date is set to be November 21st. Then we have Hours Financials. The total income was up 25% and PAT was up 13%. The NIMs in H1 contracted by 17 basis points to 8%, and 69.7% of the AUMs were for home loans and the balance for mortgage loans. Then we have Ugro Capital. Revenue was up 63% and PAT was up 5.48 times at 28 crores. The net loans originated were up 34% year on year, and the AUM was also up 74% year on year to 7,592 crores. Then we have Aditya Birla Sun Life AMC. The profits beat the estimates of 119 loss, whereas the total income was up 0.66%, and that was, however, down 7%. Then lastly we have NLC India. The revenue was down 15%. EBITDA was also down 29%, and EBITDA margins also contracted to 28% versus 33% last year. However, PAT was up 2.60 times to 1,085 crore rupees.
All right. So again, a whole host of stocks that you have to watch out for. And now let's shift gears and talk about earnings previews. And we've got quite a large number of frontline companies to watch out for. Reliance Industries foremost among them. Mihika, what are the key numbers to watch? It's going to be a good quarter as far as the O2C segment is concerned, right?
Yeah. So Reliance Industries is set to report their earnings today, and analysts estimate sequential growth in both revenues and profits, mainly driven by the robust refining margins and improved performance across all segments, but mostly oil to chemical segments, as Alex pointed out. Consolidated revenue is expected to increase by 6% to 2.23 lakh crores, and EBITDA is projected to grow by 5.85% to 40,322 crores, and the net profit is also expected to surge 11.5% to 17,850 crores. Coming to the oil to chemical segment, it's expected to rise 3% sequentially to 15,700 crores this quarter, which is mainly driven by the improving gross refining margins that improved to $12.5 per barrel versus $11 last year. This would mainly be driven by the higher diesel cracks, according to JM Financials. However, the growth will also be partly offset by the weakness in the petrochemical segment margins this quarter, the maintenance shutdowns, and also the moderation in the Russian crude oil. To give you some context, the average crude price per barrel sold to India in July was $68, while in August it rose to $86. And according to the report from Nomura Research, the Reliance Geo Infocom segment of the company is expected to also rise 3% sequentially. EBITDA is estimated to grow to 13,000 crores. This growth is supported by the addition of 8 million subscribers and the modest 0.6 uptick in the average revenue per person. And lastly, with the retail segment, Nomura Research anticipates EBITDA to improve 22% year on year and 6% quarter on quarter, whereas Nomura estimates a 6% quarter on quarter rise too, and the EBITDA to grow to 5,100 crores. Both these numbers, the growth is said to be driven by increased footfall and the strong pace of store additions that the company has been employing recently.
All right. Interesting perspective. Thanks so much, Mika, for joining in and talking about Reliance Industries. Let's continue to focus on the Nifty 50 companies that will be reporting their Q2 earnings today. We've got Maruti Suzuki to talk about next, in fact, and we've got Vinay joining in to give us the key numbers to watch. Vinay, very critical, of course, to look at the period that we're heading into, of course, the festive season, all important. But how was the second quarter for Maruti Suzuki?
Yeah, Maruti Suzuki is expected to post a profit of higher 47.5% increase in profit. This is largely due to higher sales and an increased share of SUVs. So the company's sales rose 6.7% year on year to 5.5 lakh units in the September quarter. But if you see that this rise in volumes is not that much, but the new launches of SUVs like Jimny and Fronx drove these sales higher. But the higher average ticket price due to increased share of SUVs, what it did was good for the overall financial in the September quarter. So the revenue is likely to rise 29% and the margin may have expanded to 11% compared to 9.7% according to last year. So this is all according to Bloomberg estimates, and the investors will be looking up at what the company is saying about the festival sales, the quarter ongoing right now, and how they are planning to increase their market share in the SUV segment of the market.
All right, Vinay, thanks so much for bringing us those updates. Certainly, the volume numbers have been a pretty picture for Maruti Suzuki, and particularly in the SUV segment, not traditionally a strong point for this company, but recent launches have actually worked in their favor. And of course, tie-ups with certain other companies, I'm talking about Toyota here, where the cross-badging efforts for both of the companies have borne fruit. Let's see how that pans out and what commentary comes in for the festive season, of course. But we've also got pharma stocks to talk about, and we've got two companies specifically that will be reporting their numbers today. One is Cipla and the other is Dr. Reddy's Laboratories. Earlier in the year, we were quite gung-ho about the performance of the pharma sector. That has wobbled just a little bit. Let's see whether earnings will turn the tide for these companies. And we've got Monal joining in to give you some perspective about the key numbers to watch. Monal, what are you picking up? Morning.
Morning, Navneet. Well, yes, the Cipla is expected to be a steady quarter. I mean, with all the talks going around the acquisition and the sale, it's going to be an interesting watch. The profit estimate is at 982 crore rupees as per Bloomberg consensus, while the EBITDA margin at around 23.4%. Overall, because of a very acute heavy portfolio, it's expected that the India sales might be a little muted and it might be in the mid to high single digit growth in the India business. Overall, in the US, Nomura
I think we had just a bit of a technical issue, but we're back, I think, with Monal. Monal, you were talking about the Cipla results. What specifically were you referring to? We lost the last 10 seconds.
Yeah, so the India business is expected to report a slightly muted growth because the Indian pharma market in general underperformed in the past quarter. So a mid to high single digit growth. Also, now for the US markets, it's expected that the trailing 3 month sales, Nomura has reported, saw an increase of $12 million. So now this is on account of one particular product seeing a higher market share. The Revlimid, which has been the star drug for all the pharma companies in the US, is expected to see stable sales as per Nomura, and the market share in Albuterol, which has been a concern because it came off the peak and then the company was losing market share, but that has stabilized now, so that should be okay. Overall, gross margins are expected to remain stable because of the benefit of price increase and freight cost normalization. And the company has a strong product pipeline in the US. So it's important to watch out for the commentary the company has on the launch dates for these new products and the long-term growth outlook for the company.
Right.
Okay, now we're going to move on to Dr. Reddy's, which saw profit estimate of around 1,281 crore rupees for the quarter and an EBITDA margin coming in at 28% as per Bloomberg consensus. Now, you could expect a slight underperformance in the US market, and this has been the theme with Dr. Reddy's because of the uncertainty around the new launch pipelines and the price erosion that is being witnessed in the base business. Overall, the expectation is that you're going to see a lot of competitive pressures in certain large products of the company over the next 12 months. However, in the current quarter, there has been stable sales in Revlimid, which is again the star drug for the company. But overall, there has been a marginal decline of $5 million over the last quarter. Russia sales are expected to improve, and India performance is expected to be in around high single-digit growth. Overall, the announcement of the new product launch pipeline is a key monitorable for the company.
Thanks so much, Monal, for bringing us those updates. Let's very quickly take you through a few more stocks that will be in action because of news updates. Himansh is joining in with that list. Morning, Himansh.
Morning, Alex. So a few updates to keep in mind. Nothing groundbreaking as such, but these stocks could see some reaction or not. But regardless, the key updates are with Pravig. The board has approved the merger between Eulogia and the company. Both the companies are in the hospitality sector, and in this merger, there will be 17.3 lakh new equity shares of Pravig are going to be issued to the shareholders of Eulogia, and the share exchange ratio is set at 27 shares of Pravig for every 187 shares of the transferee company. Then we have McLeod Russell, where the subsidiary Borelli Tea Holdings sold 100% stake in Bhupen Tea Company, which is based out of Vietnam. It's a step-down subsidiary of the company, and Fupen Tea will be sold to TLK Agriculture for an consideration of $2.15 million, or about 17 crores, odd crores. The sale is expected to be complete by December 24th. Then we have Lemon Tree Holdings, where the company has signed a license agreement for a 50-room property in Vishakhapatnam, and the hotel is to be under the brand of Red Fox Hotels, and it's expected to be operational by FY26. Lastly, we have Bajaj Finance, where the company is to consider a warrant price issue on November 1st. And this is after the company recently announced a 10,000 crore fundraise, both with warrants and QIP. And before I forget, Paisalo Digital as well, the board is set to meet on October 31st to consider raising funds via debt. So these are the stocks to keep an eye on and keep a track of their updates as well.
All right. Thanks so much, Himanshu. And that brings us to the end of this edition of Trade Talk. Hopefully, you've gained some perspective. Do stay tuned. Lots of coverage of the market lined up over the course of the day. This is BQ Prime.